Hi, Warriors. Everyone doing okay? So we have the yen at 154, which if you were in face yesterday, that potential move was laid out by Kman that we would take out that level and head towards the next important level of 154. Nice work, Kman. How are you, Steve?
Thank you, Coach. Good morning. And good morning, everybody.
Good morning. Michael Weissman, Mark, John, Brad still hailing me, AJ, Hugo, Ingmar, Tim, how are you? Legends. Yes, we're all legends in our own minds. That's when we're in a delusional uh, state of mind. You're my herald. Okay. It's good to have one. Never knew I needed one, but maybe I do. With a little help from our friends, right? Remember that song? So you guys have to get out there and spread the word about Forex Analytics so that people that are lost can also be found. So here's a call on the end by Kman. K, we're at this level right here.
Yeah.
I still show a little divergence up here.
Mhm.
What could stop it?
Verbal to start with intervention. And for the rest, quite little, I think. It's yeah, we are though trading on a daily trend line right here, 154.10-ish. But it's right here if you um, on the daily, it's quite visible. Zoom out a little bit.
Should I just
Or
move this to
no, no,
here?
no, 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 no. It's actually coming from above. It's actually coming from 162 there. Uh,
Oh, it's a downtrend line. Okay.
yeah, it's a downtrend line. We're right on it. As I said, I mean, the only thing that can stop it now is probably verbal or harder interventions, but it's because the Bank of Japan was dovish.
Okay.
They did not open the door for December as I would even have expected that they might do. Um, it's no, it's no, the yen is to me is still not a currency I can buy. Yeah, but we have to watch. I mean, speed is one thing. We are starting to get in that. Not Ueda, Kuroda before he said that if we get several sessions of 200 to 300 points, that's excessive. But we've done 200, a little
Yeah.
over up to now. But they also said some of the Japanese officials also said that they would watch the yen moves after the central bank meetings, and I guess um, even if they won't probably yet say it's speculation. They might start to say it's against fundamentals, and then we need to be start to pay a bit of attention. But for as long as they stay mum, there's to me not a lot that is going to stop this. I'm
Okay.
thinking about somewhere high 156 as 157 if there is no verbal or bigger intervention.
Okay, here was the first Fed when the Fed started easing and the market rebelled on these. Right here, it was huge, right? And then here was the last easing a month ago. Is that when it was? And this was a struggling, grinding type of rally, didn't have any real strength behind it.
Mm.
But this, major breakdown under four. And after the cut, we've rallied, 10 bips, 11 bips. You know, uh, I I wouldn't be real comfortable being short when the market, I don't know what you think, Blake, but this looks like a false breakdown to me in yields on the 10-year. What do you think?
Yeah, yeah, it actually does. And good morning, guys.
Good
And I want
morning,
to say,
buddy.
K-Man, great hold on the yen. I'm so irritated that I got shaken out.
We're jealous, man.
I know
Sorry.
it's like, well, I actually
Don't
closed mine
be.
out for a slight loss after Besant's comments that happened in late Asia. That's one of the things about being in a 24-hour market is there are times that you sleep through stupid comments like that, and it's irrelevant because you get up and you're like, oh, what happened? Well, everything's still okay. Or sometimes, you're right in front of the computer or around where you can act when certain comments will just whip you out. And that one happened to whip me out. And I'm happy for Kman, but man, I'm so like looking at the move going, man, what a big move. Anyway, going back to the yields though, the 10-year, if you look at the ZNs, Dale,
Yeah.
and you can pull up the ZNs, on Forex Analytix or whatever. We're breaking channel support that we've been in a channel. The 10-year notes have been in a channel since early summer. And so now we're breaking down. And so yields are breaking out and the dollar's
Yeah.
receptive to it. You're seeing
Yeah.
the dollar move, whether it's, because of the BOJ, because of the FOMC. I mean, I would probably attribute a lot of that to the Fed's Powell's comments yesterday about
Yeah.
kind of really shut the door on December. Didn't shut the door, but I mean, he
Right.
really closed it and
It's
left a very narrow gap.
not a foregone conclusion, I think was the quote.
Right. Well, yeah, exactly. He's like,
Yeah.
that was foregone conclusion. And what was the last thing he said? Oh geez, whatever he said. Far from
Yeah, far from done, basically.
done or certain or whatever he said. Anyway,
Yeah.
yeah, between those two, between that, the BOJ, you got yields that are really ripping here, and the
Yeah.
dollar's being receptive. And what happens if we get the buy the rumor, sell the news today? Remember everything that happened in China, or excuse me, in South Korea, with Xi and Trump was expected. Of course, you're going to hear from the Trump administration and say, "Oh, it was a 12 out of 1 to 10." Of course, you're going to hear that.
Did they relent on rare earths, China? Did they relent?
They went for a year. They're
I
postponing
see.
everything by a
Okay.
year. So,
Yeah.
and
Sounds like Congress.
kick the can. Well, I think China probably looks around and says, "Well, if we can kick the can another year, he is
Yeah.
getting older." So, you know what I
Yeah.
mean?
They're gonna
So
ride it out.
yeah, let's just ride it out. I mean, Xi's he's playing a long game now, and I think Trump thinks he is too. So it'll be interesting, regardless.
I
Yeah, just look
all
at
right.
your TLT is good. So
Yeah. Aussie, I think that yesterday was it. And to me, this looks like a failing rally, maybe a right shoulder.
it failed
But
at
I
the
think,
618
yeah, that
this
was it.
week.
Yeah.
Yeah, it
So,
was
I
the
mean,
618. So
so we could see 63. All
yeah,
right.
actually,
If we,
Kman was just mentioning that in the chat room. He was just talking about the peso and the Aussie dollar.
stop
And
doing mind melds on me. Vulcan mind melds came in from over there. Okay. Uh, Spock. I'm gonna have to start calling you Spock. Yeah, okay. Well, it's good to, I feel better about my trades when I'm on the same side as Cayman.
Oh, too
So
kind of you, but
it's
don't
true.
don't go too far, huh? I
I
can
well, I don't bet the house ever,
I
but
can no, but I can mess it up easily as well, you know.
yeah, I know you're pretty consistent. I watch people. I'm like ice. All right, so I'm looking for good traders to not deport them, but to bring them in. So anyway, nice call on that too. Blake, did you see what happened to Meta and Microsoft yesterday after the earnings? I mean,
actually, now there was
and Google,
Google.
yeah,
Yeah.
Google liked it. There's Google. But wasn't it Microsoft? Did it come back? No, that's still a pretty good hit. That's still. And I think Meta
No,
was
Meta
the
got
worst.
smashed. Yeah.
Meta, I mean, should I cover my puts now?
Well, we are at flag support. So I have it on a
All
four
right.
hour that we are at flag support basically. And so it's what I've been looking at, but actually it might
Yeah.
even be breaking down. I mean, I guess we got to see what happens at the open. So
So isn't that amazing that with Meta doing that and Microsoft doing that, that the NASDAQ is still what, unchanged or higher on the day?
well, it's
Here it
because
is.
Nvidia is a $5 trillion company.
That's the
And
market.
and our friend Tracy, shy girl, she put out something yesterday. Somebody had put it out, and she had retweeted it or whatever, that it is twice the size of the Canadian GDP. So, I
Yeah,
mean, that's crazy.
it's
Crazy.
bigger
It's
than, yeah, bigger than countries and everything.
twice
Yeah.
Canada. Yeah, I mean, it's ridiculous.
All right. Well, Garrett's always not bad. Um, and he was talking about this being some type of topping tail in the video because it closed at the bottom 25% of the range. And, I mean, I don't have reasons to sell it. Look at that momentum. But there could be some type of pullback. So you're right. This is the market. The market's never going to correct until NVIDIA. But the way the market's been, look, NVIDIA wasn't participating in the rally until Monday. Okay, we were here.
Yeah,
We were here Friday,
it
right?
was the news. Remember, we were talking
Zoom.
about last week at underperforming, and
Yeah.
there's just some pricing news, and actually actually Chris Weston was talking a lot about it, because I don't follow. I follow Nvidia price action wise. I just don't follow the tape and all the headlines that are surrounding it, because we're looking at every other market out there. So but yeah, I don't know if it's a top or not. I wouldn't want to be fading it. I'd,
Yeah.
I'd fade it if it broke down. Like I would
Yeah.
I would I would trade some sort of false breakout. And the soybeans,
Yeah.
look,
So I suppose
zoom
they got
out,
a deal.
zoom out,
Well,
and you'll notice
yeah,
that
it's a
the
breakout.
low was the breakout point.
Oh, this was
Keep,
the
keep,
breakout point.
keep,
Oh, you
keep
had a
looking.
channel. Okay,
Yeah,
I just had a vertical resistance line
yeah. No,
here on the
that no,
weekend.
that's it. It basically, it just came back, tested the channel, and
Uh, looks
bolted right
good.
back up.
Yeah, beans in the teens is a chant from the Board of Trade from when I was young.
That is
So
before my time.
yeah, beans in the teens. So we've already done beans in the teens. So we could do it again, I think. I'm glad. I'm happy that they're going to save some of the guys that work their ass off in the fields trying
Yeah.
to feed us and make a buck. So
Save the American farmers.
yeah. So I don't know where you want to go. Are you still paying attention to WTI, Blake?
Yeah, actually, we have a still inverted head and shoulder pattern there, and I'll take over whenever whenever you want. But yeah, still have an inverted head and shoulder there. It's complex, so that's
Oh
the
yeah.
right shoulder is just slightly lower than the left, but
Right.
so is the neckline. So
Yeah.
here I can
All right. I'm going to give it to you.
all right, I'll take it. I'll take it over from here. But yeah, it's been a hell of a 24 hours, and we've got a lot more coming. But I'll just go to crude really quick, just so you can see the setup that we have here. For those of you that are unaware, whoops, didn't mean to do that. Let me put all that back up. And here's the inverted head and shoulder pattern. So you can see
Yeah.
it's a complex. That means right shoulder is a little deeper at the 50%. Neckline is slanted to match the shoulders. So which is good
That's a
because it'll make it
beauty.
easier to get back to the 200 DMA on a breakout. So
Yeah, that's a beauty.
yeah, so it's a decent setup. Now, here's my big rub with it though. I'm not I'm 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 not sure if we're going to get an extension in the equity markets today. I think everybody had been buying in anticipation of what of this whole China US meeting. And so if you look at the S&P, let me get over here real quick. Let me just show you guys. So we reached above, as most of you know, this is a 5-year channel, or it goes all the way back to 2018. So 7-year channel, really, and we are above it as a slight
Yeah.
throw over. If you take the closer channel, which is in teal here, this is a throw over as well. We are coming right back to the top of it. So in other words, if we break through yesterday's lows and we start filling this gap,
Yeah.
um, I fear that the stock market it like if we go back to Friday's highs, basically, or Friday's close,
Yeah.
I would not want to be long equities. And I think that that is a buy the rumor, sell the news type of event. If that's the case, then going back to tying it back into the crude comments, I wouldn't be so excited about crude at 60. I'd think I'd try to buy it again in the low 50 or in the mid 50s if
You
we
know,
see.
if that does manifest, Blake, the gap we left from Friday to Monday would then be defined as an exhaustion gap after a throwover. And what does exhaustion mean? It means the market's tired, might be over for a while.
I think
So
we've seen that play,
6,800, yeah,
right?
yeah, we've
We
seen
just
that
recently
before.
saw this play in gold.
Yeah, the overthrow. Yeah.
Yeah,
But
yeah.
the gap, people, gaps can tell you something too. It's hard for me to believe that the gap that we left Monday is a breakaway gap since we rallied 20% into this gap. A breakaway gap usually happens near the beginning of moves and a measuring gap in the middle of moves, but not after a huge advance. Gaps like that can end up, when they're filled, saying that's it for a while. So
Yeah, it could be
to be
a,
aware
it
of.
could end up being an island top, especially if we like, let's just say an island top, a good example would be, and I'm just painting a picture, which we don't know. I can't tell you what's going to happen over the next couple of days. If we leave this like over the
Yeah,
next couple of days, we're here, and then let's say something happens over the weekend where we gap lower, then
yeah,
that's an island top, and then
yeah.
island top is when you leave that this whole
That's even
gap.
more bearish. Yeah,
Yeah, that would be, like guys, that we're just kind of showing you some examples, but this is the kind of stuff that for those of us that have been around for decades, and we've seen, the repercussions of moves like this, you got to pay attention to it. So, and the way the dollar's acting and way that equities are acting following this, epic meeting, I am a little concerned that we could see, these types of formations develop. So it's something definitely worth noting. Hey, we got a few other things to talk about, and I know you talked about the BOJ, Kman. I do want to go back and just reference the FOMC just because I think the FOMC was a big deal yesterday. We saw the reaction,
yeah,
following the Fed's comments. Now we recovered quickly, and like I said in the chat room, that 60 pip drop in the S&P, that was a buying opportunity going into the China, the Xi Trump meeting. No one wanted to be short going into that, but now that we're past that, I think Powell's comments really should be a warning to the market, more of, hey, if you don't cut rates in December, this is what we're going to get. What are your thoughts about the FOMC yesterday and Powell's hawkish comments?
Me?
Yeah,
Yeah,
Cam.
sorry.
No problem.
Yeah, I mean, surprisingly to me, hawkish. And yeah, market needs to reprice because the way he brought things over, saying that the discussion is quite hard, nothing is done. It does. His press conference was clear that he's on the side of a pause now, unless he's forced to cut in December. And he that was a clear message to the markets not to go and overprice stuff for the Fed. It didn't close the door, but it made it quite difficult to open it
Right.
for December. And yeah, I think the dollar it's kind of logic that the dollar is catching a bit on the back of it because I think it did surprise the majority in the market as well, who were hoping for him to leave the door wide open, maybe even announce QT immediately, which he done only for the 1st of December. Yeah, and the discussion we it nearly came over as he wanted to isolate Miran, how do you call him? Because it sounded a little bellicose at times, no?
Yeah, and that isolate is actually a pretty good way to frame that meeting, because remember, the Fed is about independence and also unity. And so when you have this Moran out there that's getting a little, I'm sure, without knowing, we don't know what happens behind closed doors there at the Fed, but I have to assume that he is definitely an outcast,
Yeah,
um,
and
in that group of governors.
yeah,
So,
and the way Powell spoke, I think there have been some serious discussions over this meeting.
oh
Uh,
yeah, oh
yeah.
yeah.
Oh, by
Hey,
the way,
I was just
Blake,
gonna
but
say, oh, go ahead.
yeah, by the way, we have Grega as well.
I was just gonna say that, before I turn it over to Greg, and I'm so happy that he's here. So when I'm looking at the euro and this,
I like
triangle,
that, Blake. I like that. That's my target.
yeah, I'm looking at 115. The reason why 115 is a big deal to me, because if you look at the entire move here,
Yeah.
let me go ahead and do this real quick. That 78% retracement comes in at 115. Now, if we extend into more of a bigger butterfly to the 261% extension, it takes us all the way down to 114. So I think there's a couple of targets on a breakdown, which, by the way, we are accelerating lower at this point. And I know Grega, speaking of which, Greg is here. A couple weeks back, you were looking for a euro rally. We've ended up being in quite a consolidation. So what are you looking at, Grega, with the euro now?
Well, it's still, I mean, hey, I
Good
think
morning.
it's still a very, I mean, very rangy market here. When I look at the dollar itself, I mean, we are just, as long as we are trading below this 100 level, uh, I cannot really decide and confirm that we are reversing these trends. But when looking at the Aussie today and even Kiwi, it certainly looks like the dollar could see a bit more upside, especially if Aussie, which has been doing pretty well since the beginning of the week, is now also turning. So I think that these ranges may not be broken just yet. I think that Aussie, as you just opened, could continue to the lower side of the range, especially if the stocks would really see some pullbacks after yesterday's Powell comments. But I'm surprised that stocks are still doing quite well. Actually, we are trading at the highs. We are still in the risk on mode. Dollar somehow it has its own path at the moment, and we'll see where the US yields will finish this week. I mean, the 2-year US yield had made a pretty nice rebound from the lower side of the potential wedge formation. So I'm not sure if that's it for the dollar or no, but certainly we
It's even
cannot trust.
stronger than the 10-year. So it's more powerful move than the 10-year.
Yeah, it's a very strong move from that new low, and if you will connect the lines, you will see potential wedge there. So I would
Yeah.
be watching this one very carefully. So I'm I don't know. And looking at stocks, they are completely on the different path as set. So it's not really something to connect the dots, I think. But
Yeah,
in
well, I mean, the stock market's on its own. It's on its own program until it's not. Nothing matters until it does. And that's the thing
yeah,
about, when you're in a really bullish or a really bearish market. And I guarantee you guys, we're going to be in a market, whether it starts today or whether it starts, in 2026. We are going to be in a market sometime in the very near future where we look around and say, holy shit, there's are no buyers, and unfortunately, you go from extreme to extreme, and we might be doing that really soon. So
You know what's
I
interesting? Well,
go
and
ahead.
I'd like Grega's comment on it. So, everything came in stronger, believing there was going to be a deal between Xi and President Trump. We had that
Right.
gap higher opening on everything. And Bitcoin had a little bit of a sympathy rally. Blake, we got to 116 if you want to pull it up. But to me, it looks like 100 grand is in the cards. We have that between 108 and 116. So, that could take it back down towards 100K. It's one of the markets that gave up all of Monday's gains. There aren't a lot of them.
yeah.
And so that's inherent weakness to me. How about you, Grega?
Yes, I think that now when, despite very strong push to the upside on Nvidia yesterday. Bitcoin just cannot find any buyers, but I think that today we will get the earnings from MicroStrategy and Coinbase as
Oh,
well.
yeah.
So maybe this could put some optimism back. But if you look at the technical price action, we could be dealing with a head and shoulders stop formation. If you look at this chart, Blake, from on the price data from September, and basically maybe we just completed the right shoulder.
I see what you're looking at.
Yeah,
Okay.
I was
Got it.
looking at your chart. Yes, this one.
Okay.
So if
Yeah.
you zoom on, yeah, exactly. And also, I had on a daily chart potential ending diagonal. So I think it's a pretty dangerous place to be. And if stocks would really give up, I think that this thing will just, as I said,
Collapse.
collapse through the supports.
Yeah.
So
Yeah,
Okay, cool.
no,
here's your
that's the
support that you're
alternate
looking
count.
at, but
This
there's your
one.
longer term, right?
That's the primary wave count, exactly.
Okay.
Okay. So that's a
Yeah.
change. That's a change from a few
But
weeks ago, right?
But if you look at some altcoins, for example, Ripple, Bitcoin Cash, whatever, you will basically see that they're, I mean, are doing pretty well compared to Bitcoin. So it looks like that there are flows whenever we see Bitcoin making such a strong move to the upside, and there will be some uncertainty in the markets. There will be crypto traders that will be making transactions from Bitcoin to some other altcoins, and that's why
Yeah.
altcoins are still quite maybe are looking quite attractive on the short term. But
After that flush out, I don't know. I mean, how many people want to step in after that? I mean, I was traveling, but man, these moves were pretty freaking gnarly.
Yeah,
So
it's like an SMB move.
yeah, and by the way, the euro's
yeah,
absolutely getting destroyed ahead of the ECB here. Kman, you got any I'm happy about it, but what are you thinking?
Yeah, I mean, it looks as if the market needed a night's sleep over the over the FOMC to continue because the 10-year is ticking up as well. I mean, all the US yields are ticking up, and the dollar is actually taking over again. We had a pretty stable morning in Europe, and as soon as you guys walked in, the dollar is taking over again. Yeah, I wouldn't fight it right now, especially that yeah, Aussie is coming back to the 40-50 zone as well. The one thing, though, and you were talking about correlations a bit earlier with Grega as well, is that a lot of correlations are still out of the window, and if they are correlated, they look really, I mean, the occasional correlation. Because if you look at gold with what happened on the FOMC and with what happened on G and Trump, unless it drops like a stone in the next 5 minutes, of course, now I'm going to say this, but it seems like the only instrument that where the market is still reluctant to buy into everything because it doesn't want to really come down, right? We're still closer to 4,000 than to 3,900 where we stopped after the FOMC. So correlations are still tough to really find in this market. So I think we need to take each instrument on its own, as Greg already mentioned.
Yeah,
I
gosh, this euro is just really falling apart right now. And remember, the
Yeah, now it's
ECB is
going.
usually we're
This is
usually
below
covering up.
yesterday's lower.
Yeah, yes, we are. We're just breaking yesterday's lows. And that should open up. I mean, this is all happening before the news, so it's like before the headlines. Like it's hard to.
ECB should be a snoozer. Huh?
Yeah, it should be. I mean, theoretically.
This is dollars. This is not euro. This is dollars.
Yeah, it is a dollar move. I mean, look at I just picked up some dollars on some other crosses too, while Grega was talking, and I mean we're seeing it is a dollar move all the way around. Look at the dollar yen. I mean, the dollar yen is almost at the 127% extension. K-Man, I know you looking at this big triangle resistance in dollar yen. I
Yeah,
think
we're
it'll
trying to break
break.
it. Huh?
Yeah, I think we're going to complete the bull flag pattern, which takes us to about 156 and change. But I mean, once that breaks, then it opens really the door. Now, remember, this is all, and by the way, I'm just closing out my euro now from, I mean, I've been short for the last couple of days. So I just closed it out for those of you that are in the chat room. I'm
Well,
not going to be able
after
to post all
watching
that stuff.
paint dry, this is okay. It's been
Yeah,
like
and I don't
watching
mind getting
paint dry.
back in. I just want the ECB. I want to get past the ECB. So I know we're on pretty big resistance, or excuse me, support. You look at the dollar index. The dollar index is at really, really key resistance here. Actually, we're trying to break. But I mean, look at the reversal that we've seen in the dollar CAD. I
Yeah,
know
it's
if
big.
you guys were in the Forex Analytics chat room, the dollar CAD here, we had put in a pattern in play because we hit the 38% retracement. If you guys didn't see that, we were chatting about it in the chat room yesterday when it was at 139. So this is a 38% retracement of you take this entire move here. So that from this low right
Yeah.
here to that high, there's your 38% retracement. I'm like, we got it. There's triangle support, previous
Yeah.
breakout. You got to be a buyer down here.
Yeah. New highs
And
coming, bro.
yeah, I mean, we've done quite a reversal already. So it's been a big move. I'm buying US dollar dips this morning for sure. So hey, I know you have a guest here, so I don't want to take up any more of your time. But I want to say, Grega, thank you for being here. I know we missed you the other day. So really good to have you here. Oh shit, I didn't want to do
No
that.
problem.
Yeah, so Kman, thank you very
Hi.
much for being here as always.
Yeah.
And I'm sorry, I'm trying to trade here, guys.
All right, I got it, Blake.
All right,
Go
thank
ahead.
you,
All right.
thank you.
All
Yeah.
right. Listen, thank you, team. Grega, thanks for updating us with your thoughts today. And K-Man, nice call on warning people that were playing the double top in US dollar yen. You know, keeping people out of bad trades is very important. It doesn't show up on your P&L because you didn't do it, but avoiding bad trades and having an open mind to good traders that what could happen may have shifted some people's bearishness to get out of the way of the BOJ yesterday. So that's worth a lot of money, even though it's a non-entry on your P&L. So great job. And Dream Team, we'll see you all tomorrow, wrap up TGIF, and then I think Blake's going to a football game again this weekend.
No,
What a
no, no, no. I'm going to
uh,
drink some wine, buddy.
all right.
I'm gonna go be I'm gonna be in Napa and I'm gonna pull a
Oh wow. All right.
what was the old pirate Johnny Depp.
Oh yeah. I forgot
I'm gonna
what
be
his name was.
I'm gonna be a drunken
Yeah.
sailor
All right. All right.
in
Don't
Napa.
forget your eye pitch. All right, man. You
All right,
Buccaneer.
that's right.
Uh,
Jack
and, and-
Sparrow.
all right. So
That
guys,
Jack Sparrow, that's it.
Thank you,
see,
Dale. Thank you,
K-Man
Coach.
knows
Thanks,
that. He
coach.
knows everything. All right. So, thank you guys, and welcome back to Face, Carley Garner. How are you?
Uh, I'm good. Thanks, Dale, for having me. Good morning.
Oh, God, it feels like it's been a long time. So,
It has.
3 months. So, I'm interested in what you're seeing at this juncture.
Okay.
Uh, Go ahead.
Well, all right. So I was listening in on your previous conversation. I noted, and you mentioned the weakness in Bitcoin and as
Yeah.
a possible red flag. So I thought I'd start with this chart. This is basically it's exactly what you were saying. Bitcoin has a very good habit of leading the S&P higher or lower. Usually Bitcoin will
Yeah.
bottom or top first. The S&P will come later. And so we see that Bitcoin topped here in early October and really hasn't regained its mojo while the S&P tried to, or well, actually the S&P obviously did. But we are assuming that the pattern's going to continue and the S&P will eventually follow Bitcoin lower here in the next um, handful of weeks. So
In the next decade.
in the next,
I
maybe
I know
the
what you
next decade.
mean.
No,
Yeah.
actually, I wouldn't be shocked to see kind of a weak decade for equities. And then I'll show you what we're doing about it. I think I've got it here. Yeah, we put this trade on yesterday. This is a daily chart of the E-mini S&P. And obviously, it's been anyone try to
Yeah.
be a bear in the stock market's had a tough time. Your timing has to be really good because this has just been a perpetual bull market since April. But for anybody that we have a lot of clients that some are speculators, but some are just portfolio hedgers. And this is a really great time to hedge your portfolio because the call options, especially yesterday, call options were wildly overpriced because we're in an uptrend, because everybody's excited and euphoric and pricing in all these interest rate cuts and China deals and all these kinds of things. So we suggested that anyone that needed to hedge or wanted to play the downside aggressively could sell a 7,300 call in the S&P and buy a 6,200 put. It's an even money trade. We're basically collecting 25 points and then paying out 25 points for the put. So it's a free trade.
Right.
Risk is above 7,300. It was only, I want to say 53 days to expiration. I could be off a day or two, but it's less than 2 months. So unless the S&P rallies 350 points before expiration, it's kind of a no harm, no foul. 6,200 sounds pretty far away. I get that, but these markets, risk comes fast, and we
That's
don't have to
back.
see.
Yeah, that would just be
Yeah.
back to the prior record high of 6140 before we broke out, right?
Right. Yeah, and
Yeah.
everybody thought that was pretty high. So, and also it doesn't have to get to 6,200 for this put to gain in value substantially. If we have a day like this where we just come back down to the bottom of this range, this put will be worth probably, I mean, it's hard to say because you're estimating time value and think volatility, but
Right.
my guess is it would be worth at least double, maybe even a little more than that. So it's a high leverage, low risk trade. Margin's about 10 grand. So that's what we were doing.
Okay.
We'll see how it works out.
I wanted to ask you, and I agree with you calling gold a risk-on asset. Do you
Yeah.
think the break in gold was a signal
Oh
for
man.
for other things, not
Um,
just gold?
yeah, you know what? The gold, so to be for full disclosure, gold
I
ate my
know.
lunch. This market right here, from
Yeah.
here to that $1,000 rally ate my lunch. So
Yeah.
we've adjusted and we're trying in the process of trying to recoup what we lost. But so I've been wrong on gold. I'll say that. And to be fair, as wrong as I was, I honestly think the outcome is going to be exactly the same. We were expecting this area to hold.
Right.
I think in normal market conditions, and when I say normal, I mean, take all the pandemic stimulus out, take out like the speculation just became so rampant
Yeah.
that I mean it is what it is. But I do actually, believe it or not, I do think we see the low 2000s again, before we really have another chance at a rally. That's just how gold functions. I don't think
Okay.
this time is different. I know some people do. Maybe it will be. You can see the RSI here. This is just completely insane, honestly. 90 RSI on a monthly chart. I've only seen that in a few commodities. We saw it in crude oil, when Russia invaded Ukraine. We saw it in natural gas around that same time, but I've never seen those hold. Usually when you start seeing RSI of 90, something is broken, the market's broken, and it usually ends in a massive washout.
Yeah.
Going
I
back to
think
natural
gold, I think
gas,
gold, I
yeah,
think gold did that in 79.80.
it
In
did,
fact,
yeah.
in fact, I think it was up 9 weeks in a row, just like gold was here in 2025.
Yeah, I agree. I was kind of modeling this move on 2011, and I should have been looking at 1979. But to be fair, I was only 2 years old. I hadn't lived through that, so that was kind of off my radar. But that's exactly what we did, and I think we repeat exactly what happened in
What what were
1979.
you trading then?
So we were short calls. So when the market
No,
got
I
up
mean when
here,
you were
um,
two.
oh, I probably have, pick up jacks or something. I have no
All
idea.
right, all right. I'm sure you were doing
Um,
something.
yeah. So I think the interest you mentioned that gold being a risk on asset, the really craziest thing about this whole thing, and unfortunate for us, is um, speculators, they kind of pick a couple markets, and they happen to pick gold, and they picked cattle, which is totally off the charts. Very rarely do you see speculators get involved in cattle, but they did. And we happen to have positions in both gold and cattle at the same time, and it was kind of a nightmare. The correlation between gold and cattle really shouldn't exist. They're two assets that
No.
have nothing to do with each other, but they were
Yeah.
running at like an 89% correlation, which is silly. That tells me a lot of weird things going on, just funny money coming in, pushing things around. And I'm not making excuses. I'm just saying sometimes markets do weird things. But so I do think that gold and cattle have both topped out at exactly the same time, which is not surprising because they've been running up together. And I think it is probably indicative of kind of the speculative hurrah maybe running out of steam. So we might see something similar in stocks as well. I think you're right.
Okay. You doing anything in grains? They look,
We are.
they turned the corner. The beans have a breakout now.
We did.
Okay,
So
there you go.
so when beans were down in this area, we bought calls. We
Yeah,
actually are
nice.
still long. We're still long 1120 calls. We originally had 1060s. We rolled them up to 1120s because we weren't sure how this would pan out. So we're still long calls, but yesterday we bought puts. So some of our clients are long strangles, some are just long puts, some are just long calls. I mean, they have a mind of their own also. Um, I think this is probably a fake rally, like a fake breakout. We've been in this range here
Yeah.
for a year. The last time Trump was in office and we had a trade war with China, soybeans basically they dropped initially. Let me show you actually. Resize my chart. Okay. This is when it started last time, and you can see beans dropped like $2, almost $3, and then traded sideways for 2 years. And they didn't make any upside until basically the end of Trump's administration, and COVID and some other things came into the line. So my guess is during this time, I should say, all of these little rallies, all these fake rallies we've got a China deal, and the next thing you know, China's still not buying grain. Then they tell us China's buying grain, so the market rallies, and then we find out that it was just kind of a symbolic buy, one-time buy, and they're not really participating. I hope I'm wrong for farmers. I have a lot of farm and ranch clients, but I think that's probably what we get here. I think we just the thing is China is they're not in the business of buying our soybeans. They're in the business of buying time. That's what they're doing. They're trying to buy time and hope that the next administration's a little more friendly. I don't think we'll ever have China as a grain buyer in the way we had in the past. I think that's old news, and we need to find either new buyers or this is very unpopular to say, but maybe even find something else to grow. So
Okay. Wow.
it's kind of a dire situation.
Yeah,
But
a lot of these guys are on the verge of bankruptcy.
I know it's tough.
And then who grows our food?
Yeah,
If they're out of business.
And it's a rock and a hard place. I mean, and that's exactly why government subsidies exist, because we really need to have food security. But we're leaning too much on China. What's not in the media is Trump and his administration are trying to find new buyers. Vietnam, other countries that they're not as big as China. They're not one single buyer is going to replace China, but we can
elephant.
We can diversify, because right now we're kind of like in an abusive relationship with China, and we just keep going back and trying to force them to buy our product when they don't want to. And we probably shouldn't want them to do business with us anyway. So that's my opinion.
Okay, Japan's agreed to buy some beans too. One of our attendees is saying, can I ask you about silver and how long before gold comes back down? Do you think this correction is going to last a year, 2 years, or what do you think? Months?
If that was the blow off top like we saw in 2011 or 79, which I believe it is, and again, I haven't been super accurate in gold this year, so you could just, you don't have to believe me, but if that was the blow off top, we're probably talking several years. Gold moves all at once, and then there's been periods of time like after the 1979 blow off top, we had 20 years of really
a 20-year bear market.
Yeah. And in 2011, it was almost 10 years. So we're probably not talking weeks or months. We're probably talking multiple years So, and
Okay.
it'll be, it's not going to be, we're not going to be trading at 2000 tomorrow. And there's going to be lots of big ups and downs. And a lot of people are trained to buy dips in gold because that's worked. But unfortunately, if we get a repeat of history, that's not going to work going forward, and it's going to be pretty painful for people. I think gold, despite what I've experienced here in the last couple of weeks, we're sticking with our plan. All rallies, all sharp rallies are to be sold. That's how we're viewing it.
Okay. So I think I heard you say natural gas earlier, and it has worked its way into that gap. Do you think it's going to hold?
I do. I think what drug natural gas down in the last couple of days was expiration of the front month. We're now basically worked past that, and I think this is kind of the green light. This is a daily chart. We're long March calls. That was kind of the cheapest, easiest way to get a foot in the door. Natural gas is a little bit tricky because seasonality is actually bearish this time of year. Normally, natural gas rallies going into the fall and winter because the market knows we're probably going to use more natural gas over the winter than we do any other time of year, and it prices that in. But this year, it didn't price that in. So we're kind of in a weird scenario where the market seasonality is bearish, but at the same time, prices are already discounted. So we're not willing to get wildly aggressive by selling puts and doing that kind of stuff. But we'd love, we have some calls in place just in case it makes a run, and I think it will. The calls are pretty cheap. I think they're worth owning.
Would you buy more if it had one more break to your bottom line? That would be like a
Yeah,
3 drive if you put up an RSI. That
yeah,
would really give us divergence if it
it
did that.
would. Yeah, if we start getting down to this level, we might even, depending on what the volatility looks like and what the premiums look like, we might even be willing to sell a put and to use that money
Oh,
to buy our
that's
call. Yeah,
okay.
but we'll have to see how it goes.
Does WTI look helpful as well? Some people are talking right shoulder developing in WTI.
Yeah, I have some
And
long-term charts, but let me look at, whoops, sorry. Let me look at a monthly here. Or I'm sorry, this is the monthly. So this is just a monthly look, and we're pretty bearish here. I mean, I know we're at 60 and that seems cheap.
yeah,
Hopefully you can see this, but I think I've probably mentioned this on this show before. 65 is kind of the line in the sand between bull market and bear market. You can see this red line here. You can see
yeah.
anytime the market dips below it, it starts to just kind of get extremely heavy, and we get some pretty big fallouts into the 30. So we're kind of assuming that's probably what's going to happen. This is the daily chart.
Yeah.
Um, and this has been literally for 2 years, almost 3 years. Every rally in crude oil has been sold into. It's a failed rally. It's
Yeah.
swift. It happens fast, but it never holds, and it just comes back down.
Okay.
So this is the 200-day moving average and the trend line right around 63, and it's below that 65 area that we were just talking about. That's kind of the pivot between bull and bear market. So we're in oil. We still believe it's kind of a sell the rallies market. It's a little bit tricky here though, because normally we like to sell calls and buy puts and do those sorts of things. But the calls are pretty underpriced. Volatility is very low because we haven't done much at all in oil. So you want to be very careful. I wouldn't suggest doing that in oil. I think just buying puts or selling futures and buying calls to hedge it or something like that's a better play. I wouldn't be selling naked premium there because anytime it gets this quiet in oil, it's just a kind of a ticking time bomb. Something's going to surprise the market and it'll start moving. And if you're in the wrong place at the wrong time, it's going to hurt.
The last time you were here, Carly, you were constructive, long bonds. The duration
Mm-hmm.
was a great call.
Yeah.
We've had some nice continuation. Um, we're getting a little bit of a backup in rates after the Fed
Mm-hmm.
cut. Like 10-year looked like a breakdown under 4%, and now we're back
Yeah.
above it. It makes it look like a false breakdown.
Yeah.
What's your view here on the
So
bonds?
we've been buying calls in this market, so we're looking for some upside. Again, this is the 10-year note monthly, so this is the inverse of yields. And you can see,
Right.
kind of as you mentioned, we've broken out from the downtrend line, and that downtrend line's been intact for years, so that's a pretty big one. It's not uncommon to see a market break out and then come back down and kind of retest that line. I think that's what we're doing. So We may have a little more weakness in the short run, but I think I'm looking at this as a, kind of a buy the dips type of market. I think we're in just a big cycle. Let me pull this chart up. I may or may not have shown this on the show before. I'm not sure, but this is the red is the 10-year note futures. So the
Yeah.
one that we were just looking at, the green is the S&P. And when I look at this, I see this is right before the financial crisis. These are treasuries, and we kind of took a couple, 2 or 3 years of bottoming out here, and kind of exactly like what we're getting here. The stock market was just roaring.
Yeah.
But eventually, after, we're now starting to lower rates, but these types of things are in slow motion. So we've had high rates for a very long time. It's very possible that we get a repeat of something like this, where these higher rates or lower treasuries are hurting the economy underneath. We can't see it yet. It's not showing up in the numbers, but it's slowly, bleeding us dry. And we might see the stock market roll over and treasuries move higher. This, if you look at this, it's really the exact same pattern. The difference is the slope. Like the stock market's on a tear
It's like
because,
gold. It's
yeah,
parabolic.
right. Because of, in my opinion, because of liquidity. I mean, if we wouldn't have injected all that cash into the system in 2020, I think we'd be looking at completely different charts. I think it's really just a liquidity phenomenon.
Okay, so let's I want to ask you something that, I've believed for a while, see if you're in that camp, that the bond guys are the smart guys and they're the ones that get it right. So if the bonds are acting better, that they see the potential of a growth slowdown while the stock market is just trading on liquidity. Are the bond guys smarter than stock guys?
I think
They
I'll
were
say
at the
this.
board of trade.
Yeah,
I'll tell you that.
they probably are. I think in my view, in this environment, like in 2025, which is much different than the past, I think it's more of a, listen, the speculators, the retail crowd, the kids, and I'm not saying they're not
Yeah.
smart, I'm saying they're not experienced.
Okay.
There's a
There's
lot
a
of young
difference.
kids that are just, yeah, they're buying stocks because they're going up. That's
Yeah.
really, it's as simple as that. And they're not trading bonds. So I think, the bond market's probably trading on fundamentals, and the stock market, in my opinion, is not trading on fundamentals. It's trading on liquidity and euphoria and all the fun things. So I do think the bond market's probably going to get it right.
Okay. Best idea into the end of the year, and I know you've already given us some nice ideas and actionable.
Um,
Anything else?
You know what? Yes, let me pull up wheat. This is wheat. Wheat has been a
Yeah,
dog,
you're
just a
right.
dog. But this is a long-term chart. It dates back 20 years,
Yeah,
and we're right there. So maybe wheat goes a little bit lower, but if you're someone that likes to trade commodities on as a position trade, not just a short-term spec, I
yeah.
think being long wheat is the right place to be. Anytime we've come near this trend line, we started to get some pretty good upside volatility here and there. So I think wheat's the one to keep an eye on.
Okay. I mean, even a bear market rally, 50% retrace is
Right.
big money, right?
Yeah, exactly. And we've
Yeah,
seen, I mean, here we rallied
yeah.
almost $3. So I mean, it could be, yeah, it could be pretty good. Everybody's short, the whole world's short, everyone's given up on it, and that's usually the time where you get some big short covering rallies.
I'll ask my attendees this. What do I see when I'm looking at this chart? Anyone want to make a guess? Let's see how brainwashed you are. Anyone notice what's missing on this chart? I'll give you a hint. It has to do with three. No. How many drives? How many drives on that wheat chart? Yeah, there you go. All right. So, to complete the pattern, it would go above 1440, right? Anyway, I'm
Yeah,
not saying bet on it, but you know what? If
well, that'd be
Russia,
nice.
you know how that could happen, Carly? If Russia, the
Oh,
war doesn't end,
hmm.
and for Russia to end it, they take back Odessa, and
Well, it
we
could.
also that would interfere with grain shipments out of Ukraine that already
Hmm.
is in a drought. So
Yeah,
anyway, I'm just
yes, it would.
just a little notes for Pinkert stuff, you know. So,
All right. Noted.
anyway, I love your stuff. We're all
Thank
wrong
you.
sometimes, you know. I came in short semiconductors this week. We're all wrong. And you know what? Sometimes we're just wrong for a while. And,
Yeah.
you know, there's one thing about being wrong, which is enough
Mhm.
to admit, but you shouldn't have to explain how wrong or
Yeah.
how right. You know, like you were wrong, like you kept shorting gold all the way up to
Um,
4,400 and, you know, you went broke.
yeah.
You know,
Yeah.
I was doing, I went to the beach this summer and I was in this small little RV and I did interviews from there. Certain people interview me and
Hmm.
viewers were saying, is Dale okay? Is he seems to be living in a trailer park or something? Is he doing these interviews from a trailer? You know, I was. Anyway, I'm glad I don't have to live in one of them, but it did get
Yeah.
me out of the heat. So, you know, there are a lot of
Yeah.
people, I bet, hoping
Oh,
that I
for
was
sure.
in that RV. There's plenty of people out there like that. So, anyway, we're all wrong at
It
times.
happens. Yeah, it
It
happens.
all so check out Carley. I mean, especially options are a specialty, and you know, even though I trade them, I wish I had Carley's knowledge about knowing when they're cheap or when they're not. I just use the VIX to kind of guide it. But you know, people that know the Greek of option trading, it's a big edge, okay, and how to write them as well. So if you're interested in that kind of trading along with Carley's analysis, that's where you find her, right there.
Yep. Thank you. This is decarleytrading.com. So that's where you can come and sign up for newsletters if you're interested. And we also have started a Substack. So if you prefer the format of Substack, you can find us there. Here's our page.
Okay, Carley, my trading warrior sister, have a great fall trading season,
Thank you.
and
Appreciate it.
I'll talk to you in the winter.
All right. Thanks a lot. Talk to you
All
soon,
right,
Zach.
Carley Garner,
Oh,
follow
yep.
her on X. What is it on X again, Carley?
On X, it's at Carley Garner is the handle.
Okay, so that's easy. Add her name. And that's a wrap,
Yep.
everybody. So don't just count your charts. Don't just count your beans and corn and coins. Count your blessings and be grateful that you're in a game that you could speculate because most people are worried about how they're going to put food on the table now that the SNAP program has been um, not there for people. So be grateful, and I'll see everyone tomorrow. We'll wrap it up on TGIF. Thank you, Carley.
Thanks, Dale.
Appreciate your work.
Thank you.
So that's a wrap, everyone. Adios. See you tomorrow.